Hello there, future homeowners. Are you planning to buy your first home in Australia and don't know where to start? I've got you covered. Today, as part of this video, I'm going to talk about 10 crucial tips to consider when buying your first home in Australia that can save you thousands of dollars and a whole lot of stress. Hello and welcome to Nimsite. I do a lot of videos associated with Australia, my journey here, what have I learned, the different things to consider if you're planning to migrate to Australia, videos for students, videos for people who are already living here, etc. You can check the Australia playlist out. So without much wait, let's move on to today's video. So first things first, know your budget. So it is very important to research your budget and consider what sort of money do you have, how much money are you in a position to spend. So it's not just a deposit, right, that you have to spend. You've got a lot of other extra payments or expenses that you need to consider. Stamp duty being number one. Then you've got legal, conveyancing fees, building inspection fees, the moving or the shifting cost, and all these other payments also that you need to consider. So you have got a lot of online calculators where you can do these calculations. I'll place a link in the description to some of them on how much would be your expected mortgage for a certain amount of rate of interest, how much would be your mortgage expected for a house price of this much value. So you can put in there, you would know the kind of mortgage and the kind of deposit money that you might have to do if you're doing like a 5% deposit or a 10% deposit, etc. Apart from that, there is also a stamp duty calculator. I'll place the link to that also in the description. For example, for a house that is of 700,000 value, and if considering it's your first property and if it's your principal place of residence, the stamp duty would be around 25,000. So these kind of fees would come in for sure, and you need to allow that much money when you're thinking about buying or planning for your first home in Australia. So the second tip is a really important one. Check your eligibility for government schemes. Now, in every state in Australia, there are schemes that are introduced by government to promote buyers to buy their first home in Australia. For example, in Victoria, you get first home owners grant of around $10,000 if you're planning to buy a new house in Australia. Of course, there are a few conditions, but this is contributed towards you buying your first home if it's a new home. There are other schemes also, like the first home guarantee scheme. Now, I find this scheme a really beneficial one because usually when you're planning to buy a house in Australia, and if you don't have 20% deposit money, that is 20% of the purchase price, you're not able to give as deposit, you have to pay an extra amount called lender's mortgage insurance. That's called LMI. Now, with this scheme, the first home guarantee scheme, FHPG, usually you are eligible to pay just 5% deposit, and the LMI also is waived off. So I feel like it's really beneficial for anyone who does not have that kind of deposit. But the only catch is there are limited number of places. There are just 35,000 places available in one financial year. So my advice would be to apply just straight away as soon as the financial year starts. I would also in the later part of the video tell you some more tips about how you can make this journey of applying and all these things a bit more easier, so continue watching. Next tip is get in touch with a reliable mortgage broker. Now, mortgage broker is a licensed professional that usually works between the bank and you, the buyer. So I feel like having a good mortgage broker can make this journey of buying your first home in Australia stress-free and help you to get your best options. Now, a mortgage broker will review your profile, they'll assess your profile and they'll tell you how much borrowing capacity do you have, what sort of a loan you're looking at, and what sort of schemes you could apply at, what sort of schemes that I mentioned in the last video that you will be eligible for. They can make your profile stand out for you to get the best rates. Normally these mortgage brokers also have tie-ups with different banks, so it's free, as in you don't have to pay them directly. It's usually when you are applying for a loan or when your loan gets processed, they usually get a commission by the lender, or the bank gives them the commission. So I would say having a mortgage broker in your journey can help you plan things more effectively. Next tip is to bank smarter. Now this is in somewhat connection with the last tip that I mentioned about getting a mortgage broker. Now a mortgage broker can also help you in getting your pre-approval done. Pre-approval is sort of an approval from the bank that this is the amount of loan. They have looked at your profile, they've looked everything, and this is the amount of loan that you qualify for, and you are a serious buyer. It gives the real estate agents and whoever is trying to sell the property on the seller's behalf that this is a serious buyer and you would be considered first in case there are a lot of conflicts, or a lot of people are offering like a similar deal. Now there is a long journey, right, between you liking a property to you actually getting the property. So pre-approval makes it a bit easier. Also, you need to be very careful about the number of about the interest rates that different banks offer. Now you've got something like fixed interest rates, and you've also got variable interest rates. Variable interest rates, like the name suggests, it might go low as well as it might go up, so based on the market conditions, based on how the economy is. So in some cases variable interest could be really better, but in some cases I've had a lot of my friends who have had fixed interest at 2% and 3% for the first 3-4 years, while the variable interest, while we got into the loan, the variable interest is around 6%. So you can see the amount of difference in the repayments that we'll have. So that is something that you need to consider as well. Also, when it comes to banking smartly, it also includes not, paying any penalties due to missed repayments or due to missed fees, all these other fees that you need to be being right on time. The next tip is to buy for the future. It's very important to listen to your brain, your head, rather than your heart when you're making these kind of decisions, especially when you're buying your first home in Australia. Because having your first home in Australia is like a dream, right? You put in a lot of effort, you earn a lot of money, you work really hard to get to that position. So it is so easy to get lured by the display homes and by the options that you visit. Like, I remember going to some of these houses and they were so big and so massive, and it is so easy to get attracted or start stressing about the amount of money that we might have to consider, or thinking, what if we go for that kind of house where we have to pay that kind of deposit. So just don't get wooed by all the interiors and all the other things. There are some factors that you need to check which are really important for you. Like, for example, if for someone who is planning to start a family, it might be important to have a house that caters to those kind of needs. For someone who is planning to just to resale, for them the location and those kind of things may not matter if they don't want to live directly in the house. So these are some of the things that you need to consider rather than the interiors, and never go above the approved amount. Like, for example, if you're ready with a pre-approval done, stick to that, because that will make your process, your journey, you would be stress-free. A lot of things, it would make it easier. A follow-up from the last tip. Next tip is to check the neighborhood. It is very important to check the community or the place that you will be living in. Now, I understand for some people that it would be a short-term investment. Maybe they are just planning to live there for like a couple of years or something and then just sell it off. But for most of us, it's not like that. It is our first home. We have tried really hard and we want to live there for a longer time. So if you are one of those people, it's very important to check the neighborhood, check the community around, because a lot of times I've heard complaints, people buying their first home and realizing that the neighborhood doesn't suit them or the community doesn't suit them. It's not very safe, or there are other sort of problems nearby. You don't have the amenities that you would really need. So you need to consider all the factors that are important to you. Like, for example, for me, it was really important to have a public transport or a station nearby because of the commute to work. For other people, there could be other factors that are important. One of my friends gave a very important tip in this section, where they said that if you want to really know what kind of a community or what kind of a neighborhood the place has, you can visit like a community center, or you can visit a mall or any sort of place where there is usually a gathering, like you can visit like a supermarket, maybe Kohl's or any of these kind of shopping centers nearby, you would get an idea of the kind of people, about the ethnicity, about the kind of shops, about the kind of attitudes that people have towards each other. So normally that reflects the kind of neighborhood that you would be living in. I thought it was a great tip for anyone who's planning to know a little, about the place that they would end up buying. The next step is to check your credit score. Now there are a lot of platforms where you can check your credit score for free. One of the examples is Equifax. Now it is very important to clear most of your outstanding debts, whatever you can, because that comes in handy when you are trying to get a set of amount as approval for your loan, right? So these factors are also considered, like what sort of mortgages do you have apart from the house, or what sort of payments do you need to do, whether it's a car EMI. All these other details you would have to provide when you are trying to get approval for your loan. So it is important to check if you are debt free, and if you're not, what are the sort of things that you can do to become one. Content shared in this video is based on personal experience and research. If you enjoyed the video, like, share and subscribe. Keep watching, keep listening and continue learning.